Good afternoon, traders. How we doing? Who's ready to get back to the stock market movers? I was out for a day, and I hope that you guys were able to keep up with the markets without me, but I'm back and ready to get into the show today. Let me go ahead and close up one of the videos that I had open there, and we'll definitely check out today. We got a lot of topics to talk about. We got UK news. We'll talk about China news. We'll get into Bank of America. We'll talk about Splunk, Continental Resources, Arcadia Energy. We'll get into Roblox, MasterCard, UBS taking some shots out there on the overall market. You'll want to hear what number they gave on their outlook. Don't miss that. We'll talk also about Goldman Sachs downgrade on Opendoor. We'll also touch a little bit on the Kroger news. What do you guys feel about this for the supermarkets overall? And of course, we got our guest today. We got Shawn Cruz, head trading strategist at TD Ameritrade. And then we also got Matt Venturi, founder of Clearingbid. Are you guys ready to get it started? Let's get right into the show. Welcome to Stock Market Movers. I'm your host, Money Mitch, and let's see where the edge is today. There are 3 ways to make a living in this business. Be first, be smarter, or cheat. I can't help you cheat, but I can give you the informational edge to help you succeed in the markets. Welcome to Stock Market Movers. All the market moving headlines and expert opinions every day. They say money is the oxygen of capitalism, and I want to breathe more than any man alive. All right, team, how we doing out there? Definitely, if you guys caught a big mover today, throw it up in the chat. Let me know what you guys see moving out in the market. So I'm going to fix my camera a little bit so you guys can see me a little better. Let's get into this market and see what is trading today. Looks like the SPY holding on the gains right now, really close towards that 367. Can't really close above that. So that's one level that I definitely give as acting as resistance, at least in the intraday action. You guys can also see this on the hourly action where you see that hourly resistance right around, you can draw it closer towards the bodies, right around 366.96. So that just shows us more and more how it keeps fighting that 367. Was going to take a look to see if we cracked 359 on the downside. We haven't cracked that. And 357, of course, an important price to keep watch. Will we ever crack 357 again? Something that we can talk about. But definitely the SPY, we'll see what happens. Will we get through that 367 while we're on the show? Or will we start heading back towards support, towards 363? We'll have to keep watch. Of course, opening price at 363.57. First need that to hold for the bulls to continue the upside outlook. All right, so Daniel's talking about what use are these market mover? The move has already been made and already late. How are you making trades on stocks you are already late on? So Daniel, this show is about understanding what is moving out there, and how you can make trades on these already is understanding the rotation. You're never going to understand the rotation until you see it already happen. And so what are we looking for? Well, we're looking for where the money is going to see if we can actually see a trend, not just a catalyst of one stock that's making a move up. That's what market makers and stock market movers is all about, is bringing you those headlines that are moving the stocks so that you can go ahead and catch where the rotation is. And of course, there's sector to industry analysis, right? And you want to be doing this so that you can catch where the moves are going, not necessarily where they are today. That's what the show's all about, Daniel. All right, let's go ahead. We'll see what happened. We can't time the market, but we continue to try. Well, the truth is that you can never time the market. And one of the things, the only thing you can do is try to get into the best probability outlook. That's another reason why we pay attention to sectors and industry, because if you can get in the right sector that's making a move up, and you can get into the right industry inside that sector, the hottest industry, well, you're going to have to take a look. But the majority of the times, the probability of you getting into the green in those stocks is going to be actually very high. That's what it's all about. All right, getting out of the SPY talk, of course, there's a lot going on today. UK Finance Minister stepping up, Jeremy Hunt, after this position has been cut about 4 times since July. And so it doesn't look like situations in England are getting any better. If anything, there's more conflicting news now from the leadership, and that's not what you want to see. But UK Finance Minister Jeremy Hunt scrapping the cut of the lowest rate in the income tax from 20% to 19%. Also, they cut the dividend tax rate, the reversal of off-payroll working reforms, VAT claim back from tourists, and the freeze on alcohol duty rates. They also announced that the energy package designed to subsidize consumer and business energy bills would only run until April. Now there seems to be a big battle, of course, on UK Prime Minister Liz Truss as facing calls for her resignation from her own Conservative Party. And if you guys were taking a look today, there's more and more talks that Liz should step down. And now I think that you got to just continue to watch. It seems like the instability in England has actually reached a new level, and we need to continue to watch to see what happens. This was helping, of course, the pound today, but the situation in Europe is definitely uncertain right now, and for England, looking like financial instability. All right, let's continue talking about the China news also. And Chi talking about here, of course, talking about Taiwan situation, mentioning multiple statements out there. And so we continue to strive for peaceful reunification with the greatest sincerity and the utmost effort. Also stated, but we will never promise to renounce the use of force, and we reserve the option of taking all measures necessary. And so to me, this shows us more and more that we got to be careful what happens in the Taiwan situation. Of course, was stated here that they want a peaceful reunification, but they still want the unification. And of course, they also stated that the use of force is still available to them, but not what they're intending to. So we'll see what happens in that situation. And that's what always scares me. And I mean, I've talked about this. There's a reason why I don't think TSM is a good buy on these pullbacks. And that's because we don't know what's going to happen with that China and Taiwan situation. And in my eyes, I think that's too much uncertainty for me to be investing in this kind of industry. And even the semiconductors overall, that just worries me. It's big concerns, the chip battle that's going on here. And I feel like you're going to see continued battles. China also stated that they were battling in the tech sector, and they signaled that they want to win the battle in key core technologies. Of course, Xi Jinping, president of China, stating that. And so I think that you're going to continue seeing a battle between China and the U.S. for semiconductor equipment, the technology behind it. And with that being said, is this a good thing for semiconductor companies overall? I think this is a negative, as you're going to see continued battles between companies, and then also the licensing situation that we're already seeing present in technology. We'll see what happens with TSM and some of these other companies, but definitely it's a sign of concern when you're dealing with regulation control here in technology. Let's get out of TSM talk. Let's go towards the Bank of America earnings. So, of course, we're going to go to Bank of America here, BAC. Let's take a look how it's trading on the intraday after their earnings report hit the tape. Bank of America's earnings coming in here at 81 cents, beating the 77-cent estimate. Sales at 24.5 billion, beating the 23.6 billion estimate. We'll see what happens here. Bank of America got a nice lift, got above that 33.60, went up to a high of 33.87. We'll see if this can hold on the day. Definitely getting a little bit of a spike back. And it seems like, the banks have been trying to go sideways here. I mean, they usually do better with higher interest rates, but the recession concerns keeping them back. We'll see if this is finally a moment that you could actually buy up the banks. To me, I feel like this is still a rally that I would sell, but to each his own. If you guys feel that Bank of America is making a nice move here, Well, guys, keep on following it. Wells Fargo also trying to make that move. Of course, Goldman Sachs reporting later in the week. We'll keep watch to see what happens in Goldman. All right, getting out of that Bank of America talk, we got one more headline that I want to run through, which is on Splunk. So let's go to SPLK here, Splunk, and this is from the Wall Street Journal, as they're reporting that, and let me pull it up here. They're reporting that Starboard Value, it has just under a 5% stake in Splunk. Starboard plans to push Splunk to take action to boost its stock price. And I just feel like, these are companies that I just want to try to avoid right now. I don't trust any kind of company that has to deal with subscribers right now. I mean, software infrastructure names, I still don't think that they're low enough to go after, but to each his own, right? I've been talking about Asana and stocks like that. I don't want to be going after these until we really get the turnaround, because I feel like they still can go lower. And so we just got to be careful with names like this. I feel like overall, these are the ones that get cut on spending often. And so I think you'll still get an opportunity maybe to get Splunk down there towards 50. We'll see what happens. Bouncing back on the day. Nice reversal style candle on the daily. But as you can see, even into the intraday, it didn't really continue the lift on Splunk. Kind of dropped off right there off the open. All right, getting out of that Splunk news, there is some acquisition news out there, and we got some definitive agreements that are out there. So let's run through those first, those oil news. CLR, you're seeing up today, a Continental Resourcing announced that definitive agreement to be acquired by the Ham family for $74.28 a share. The tender offer would be approximately 58 million shares of common stock. And that's why you're seeing it trade kind of sideways. Nothing much going on right now. And they did get a premium, but it wasn't as big of a premium as you would think. It's only about 8% on the premium there. We'll see what happens there. Continental Resource. There's also LFG that's up big today and also trading kind of sideways off of another deal. Archaea Energy to be acquired by BP for approximately $4.1 billion. Well, this isn't the biggest move there for BP, but I can't blame them for trying to take this. And you can see how it pulled back on the day, was coming back, and now BP trying to make a move back up. But I don't think this is affecting their price too much. They did get a little bit of a push up, but we'll see if it actually holds. Of course, they have a high market cap. BP, you're talking market cap of $108 billion, and we're talking about a $4.1 billion deal. We'll see what happens with those stocks. Can they continue to lift? And LFG, right now, just going sideways, not really doing much. Did get a little bit of a spike there towards 25.86, but we're talking about like a 10-cent spike, not really much there on LFG, and it's going to trade sideways into the deal. All right, we'll get into Roblox when we get out of our first interview, but let's get out of LFG and the overall talk. Let's go towards our first interview today. You guys have seen him on before. I'm happy to have him back. Let's get right to Shawn Cruz as we get into our first interview today. All right, Shawn Cruz, head trading strategist at TD Ameritrade. Welcome back, Shawn.
Hey, great to be back. Thanks for having me on.
All right, now it looks like we're really starting to kick off a little bit of the earnings season. Are you concerned about this earnings season?
I mean, I think what everyone was looking at to start this earnings season was actually what we were going to hear from the banks, and especially what was going to be coming out of those loan loss reserves. And especially when you think about it, early last week, ahead of the start of bank earnings, you actually had Jamie Dimon come out and say he's seeing a recession on the forecast somewhere for the U.S. economy. And I think everyone took that as, well, he's looking at JP Morgan, internally at a level many of us never ever will get a chance to. Maybe he's seeing something. So I think there was a little bit of concern over what we were going to hear from the banks. But by and large, I think the banks have come out and at least been ahead of expectations, and the areas people were concerned about, it really didn't show up as problem areas for the majority of these banks.
Now, one of the things that TD Ameritrade does best is really focus on the trends that they're seeing in the retail crowd. What trends are you guys seeing right now?
So there's still this desire to go out there and find exposure and use some of these pullbacks as opportunities to accumulate positions. But just like you were talking about with a handful of the names out there, I believe Splunk was one of them, where you're saying, it's I don't know that this is the ultimate bottom or this is where everyone wants to come in. I think there could be a little bit more downside. I think we're seeing activity that's consistent with that, where there's maybe small bites being taken, but you're not seeing a huge rush in to try and call this as an ultimate bottom just yet. But there was a little bit of accumulation, and it's consistent, with 3,600 looking like it's becoming a little bit of an interesting level for the S&P 500 when it trades down there. It seems to hold, and the more that happens, then that probably will become a little bit more of a level where people start feeling comfortable coming in and buying more. But stability at a given price level, I think, is really what the market wants right now. We're through the banks, but there's still a lot to go so far this earnings season from some of the big tech companies. You get Tesla out this week. Those are the names I think the market is really waiting to hear from, those big global conglomerates.
So, what is next for the markets? And do you feel that recession concerns have actually been kind of more baked into the market?
So I think one where there's a recession of some sort baked in. I think if you get the notion from the market that we're going to get a more severe or a little bit more of a deeper recession, a lot more broad based, that's where you're probably going to see that 3,600 level no longer hold, and maybe you will get a run down towards that 3,400 level, because there's really not much of price levels in there that I think you could reliably say that would probably be the next support level. It'll be a price discovery process on the downside if we do break through 3,600. If this notion that we're going to get a pretty bad recession really start to take hold as maybe a more likely outcome. But for right now, I think the market is waiting to see and is going to keep track of incoming data, what we hear from a lot of these CEOs and management teams. But if you look at that volatility index, or VIX, hovering just north of 30 here, it's telling you that the market isn't just a little bit uncertain. They're actually very much on edge and a little fearful of what is going to come out on the economic and the earnings front here in the near term.
All right, now what are some of the popular names that were bought during the period of September?
So it was actually another, or you were just discussing that as the semiconductors. I think you look at price levels, and I do think a lot of investors out there start looking at price levels, seeing how far some of these names have pulled back, and there was a little bit of a head fake in terms of support levels out of Nvidia, AMD, Intel. Three of the biggest semiconductors out there. The only one you didn't have in that group was Broadcom. But when you start to see all those names come back, start hitting those support levels, and that it's very similar to what we just talked about, the S&P 500 and 3,600 being a support level that seems to be holding. We saw that out of a lot of those chip makers, where they were just hitting these support levels that appear to be holding up until we got that added salvo of some sort of restrictions, or this is maybe going to be the centerpiece in the next round of geopolitical issues and the back and forth that'll surely follow. That is what drove it down below those previous support levels that I think clients were looking at. So clients who were going in and buying that, it's going to be interesting to see in the times that followed, because it was sort of right after the end of that September period that we were keeping an eye on, if they decided to accumulate more on those lower price levels, or if that new piece of information around these geopolitical restrictions going on, if that maybe drove them out of those names and they started to sell. Certainly, I think that was a big shock, though, because you had those semiconductors down a pretty significant amount. And I think it's going to be interesting to see how investors position themselves moving forward. I'd like to look at the overall semiconductor index, SOX, which is put out by the Philly Exchange, but that sort of captures the semiconductor industry as a whole. That is also now down at some pretty interesting levels, and I'm watching to see if that can hold. If so, then you might actually start seeing a little bit of a buyable moment here for a lot of these semiconductors.
Excellent. Now let's go ahead. Let's do an interesting question that a lot of investors are asking. Where should investors start looking to see a turn in sentiment? Any safety out there?
Yeah, I mean, I think if you're looking at, where areas that people could go that should be relatively safe or could be relatively safe, although in a market where there's just a significant amount of risk being priced in, sometimes there really isn't many safe havens to go to. But I think energy is one area where there's still this expectation that we're not going to get this energy conundrum we got ourselves in cleared up anytime soon. Winter's right around the corner. We don't know. You hope it's a mild one. If it's not, then you might see a spike in energy costs. You just talked about a lot of M&A that's going on in the energy sector. Those things can actually be supportive of profits, profitability, cash flow as they start to consolidate some of those operations. And some other areas are in healthcare, but specifically looking in like healthcare technology, which might take you away from the S&P 500 and take you into some of the more small cap names. But that could also be another interesting area to go out there and look and see if you can find some companies who have been beaten down a little bit, and maybe themselves are becoming interesting acquisition targets because the market's put them on sale at half off and sometimes even more. Those are some of the areas that people can go out there and see if there's some opportunity to find some value in those spaces. And then I know you talked about subscription services, and that's spot on. That those subscription services that are a little bit more discretionary are probably going to be the ones that go. Everyone loved the subscription model on the way up. Now you need to find the ones that are a little bit more discretionary, maybe those ones to avoid. But I've seen a lot of analysts, and I think it makes sense. You can look in like cybersecurity, CrowdStrike, Zscaler as some areas where if you're a company, maybe you're not going to go out there and keep that subscription on something that's a nice to have for your tech teams or whatever. But certainly cybersecurity, you almost have a legal mandate to keep that be very much on top of that and keep a lot of resources going there. So that's another area I've heard a lot of analysts come out and say could be an interesting spot to go look for too.
Definitely a great answer there. And I think it's important, right? Looking at businesses to see if they are recession proof, right? What would happen to them if they get into worry here? Last question I have is just a little bit more of a fun one here. I wanted to tell you about, how do you feel about the recently announced Jim Cramer inverse ETF?
I mean, there's actually been a lot of new products that are being brought to market in the ETF in the ETF marketplace lately. I think it's always important, whatever the theme is, whatever the sort of design is behind that product, just make sure you know what's in it is always what I tell people. Maybe the inverse Kramer ETF probably has a lot in common with shorting the NASDAQ 100 or something like that. So it's really going in there, thinking about what the fees are, thinking about what you're paying for, what you're getting, what actually goes into that, how often are they rebalancing, are they every time he's on TV multiple times throughout the day. So if he comes out and says he likes a name in the morning and then doesn't like it in the afternoon, are you trading twice in the same day in that ETF? There's a lot, I think, in the details for any of these products that are coming out that you want to just make sure you're in the know about.
Well, like always, I'm sure you'll be helping uncover that for the retail environment out there. Thank you, Shawn Cruz, head trading strategist at TD Ameritrade. We'll always have you back on, Shawn. Appreciate it. All right, there you guys have it. First interview done. And I think it's an important thing definitely to keep watch and look into those kind of, especially the inverse ETFs. They're a little bit complicated and you got to see how the positions are placed. But thank you, like always, Shawn Cruz joining me today. Let's continue with the headlines that are in the market. We've talked already about UK. We've talked about China. We've gotten into Bank of America, Splunk, and some of the oil acquisitions out there. Let's go to Roblox today as they came in with surprising news and definitely getting some lift. Let's take a look. RBLX. Boom, nice little raise. Got up there to 43.05, above that to a high of 43.58. And this was all after the shares are trading higher after the company reported September 22 key metrics. Daily active users were at 57.8 million, up 23% year over year. Estimated bookings were between 212 million and 219 million, up 11 to 15% year over year. This showing us there that Roblox continuing to grow, of course, their daily active users, which is one of the most important kind of thing to keep watch, right? Can they keep growing? If this slows down, that'll show that their growth is slowing down, and they're definitely getting a little bit of a pushback. One of the things that I would say is you can see this company has been all over the place. Will it actually start closing above 50? That's what I'd be watching. You're getting close to the 200-day moving average, up there towards about 45. It's at 44.93. We really needed to get to 45 and 50 for us to start turning around the story. But this did help stocks like Snow get a lift today. So Snow, we talked about it in the pre-market, that this could get a lift off of this Roblox news. Also Unity, and they're both getting some lift today, having a great day there. So always think about not only the stock that trades with it, but also certain stocks that have relationship that are very close. Roblox, Unity, Snow trade really close together, and you're seeing some good lift there from the Roblox key metrics announcements. All right, let's keep going. Let's get to the next one. We're going to talk about MasterCard as they're launching a program with Paxos, a crypto trading platform that already used by PayPal. But what are they doing? Well, they're going to banks and trying to get them to join in. And of course, what do banks cite is the most important thing for them? Well, regulatory compliance and security. And that's what MasterCard will be providing here for the banks that join in on the program. So you can see MasterCard today getting a little bit of a lift on that news. It's not a bad news at all. Providing more services will definitely be a good thing. Now, the only question is, how secure will those regulatory compliance and security needs be? And of course, it's going to be a lot on depending on Paxos and that crypto trading platform. But we've all seen the concerns that have come from crypto trading platforms. And I would also be concerned about Paxos, just because it falls under that belt, right? I haven't found one that I'm not concerned about. So I'm not sure about MasterCard in this situation. But at least for me right now, it is getting some lift. And MasterCard has held on compared to other companies, right? Like Visa. Visa's held on, also trying to bounce back. But look at Square and look how PayPal just completely got destroyed. Those will be my signs of concern. But of course, Visa and MasterCard kind of holding on here. All right, getting out of the MasterCard talk, we could get into a couple of other conversations. I want to get into what was hot today and what was not. This is where we talk about the sectors that were into the green and, of course, what wasn't hot, what was actually in the red today. And you guys can see here right off the bat, there's nothing in the red from the open, but there are some leaders out there. Consumer cyclical getting some big up move, and we can take a look at what sector was leading. It looks like department stores getting a good push today. Kohl's getting some lift. Macy's getting some lift. Look at Dillard's with an 8.59% day, getting some lift there in Dillard's, and holding on here with the department stores having a hell of a day. Specialty retail also having a good day today. Amazon bouncing back there. Baba bouncing back. JD, looks like even the Chinese stocks are up today. AZO getting a little bit of a bounce back, starting to fill in some of that earnings gap. And it is starting to come back there, starting to push towards the 2,300. I was wondering if it'd get back to that gap. Well, you're right back in there and starting to come back up. We'll see what happens there in AZO. And of course, every time it's been going down towards that trend line, it's been bouncing pretty well on AutoZone. All right, continuing going with the trends that are out there. Let's look at some other ones. Auto manufacturers getting some lift here. Tesla up 7%. Really good day there. GM also up on the day. Ford up on the day. And so we've got to keep watch to see what happens to Tesla later in the week. That's going to be very important. Of course, earnings coming out. So we'll see what happens there in the auto manufacturers. Communication services doing well. Of course, some of the income stocks. Take a look at Verizon, AT&T getting a little bit of a bounce there. Even T-Mobile getting a little bounce, but these are not really names that I trade too often. Let's go to technology as they're getting a lift, of course. NVIDIA up 5.6%. A lot of these companies getting some push off the ground, off the support, and we'll see if they're able to keep holding. If you take a look, Microsoft coming back towards, of course, the 240s, that would be a good outlook, but it has been in the red for a while. Meta, 5.7% day. These are what we call the little rallies back, but will they hold? I'm keeping a close eye on the SPY. We really need to kind of close past going towards that 368. If not, we could crack towards the end of the day. It has been holding green today. The question is, will it hold towards the end of the day? All right, like always, if you guys have stocks that made a big move or are on your radar, throw it up in the chat and definitely smash that thumbs up. All right, let's continue going. What kind of didn't lead down, but was the least of the strength? And we're going to look at defensive names. And defensive names necessarily didn't go down today, but they just didn't move as fast as, let's say, consumer cyclical. And that's kind of normal. But Walmart, a good note today. Nice little move back up there. PG catching a little bounce. This is one thing that we got to keep watch. Will they keep selling off value? Or will value finally start catching the bid? Pepsi kind of led that bid last week, was starting to push up, pulled back. Now let's start seeing the push back up towards the upside. We'll see if Coke can continue also starting to push back through 56. We got to keep an eye out to see what happens on these defensive names. Will they start coming back? And some of these values, these value names really get some lift. That's what I'm keeping an eye out on, these consumer defensive names. Financial services starting to get a little bit of a push. Energy into the green today. Was keeping an eye out on like an XLM to see if it could close back above 100. And there you see it. We're fighting through that 100 today. Fought through it in the pre-market, got above it, now holding on the pullbacks. Needs to keep holding 100 now. I'm going to keep watch on ExxonMobil. If it can hold 100 here, take out the 102s going towards the 105. We'll see if we get a new at least 52-week high for ExxonMobil. All right, continuing here. Like always, hit the thumbs up if you guys are enjoying today's show. We're going to keep going. Now we're going to take a moment here for a Benzinga Pro promo, and we'll be right back to continue with some headlines. We still got some UBS, Barclays calling out their new S&P outlook. You're going to hear this, and it was surprising to me. So just stay tuned. We'll talk about it right when we return.
Introducing Portfolio Synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protective connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, let's continue here. And we got some news coming out of UBS and Barclays as they're going to go ahead and step up to the plate here. They're saying that UBS and Barclays are still not calling the bottom even after 2022's steep losses and extreme volatility. They say that they see the S&P 500 hitting 2,982. So that's about 298 for the SPY. Do you guys see that they could get it down that low? I mean, that's significant. That's a big call. You're talking about down to here on the S&P 500 and the SPY getting down there towards 298. Man, that would be a big move down from here. We're talking about, let me just try to get this right here. We're talking about close to 22% down, further down. They see it. UBS and Barclays. Of course, Jamie Dimon from JPM stepping up and saying 20% down further. Well, it looks like if that does happen and we get into that extended recession, you got to be concerned. Of course, they said this, despite the increased risk to growth and the rise in volatility, equity markets have neither become cheaper relative to bonds nor yet priced in material slowdown in growth and earnings. So they see the slowdown coming. They see recession concerns. We'll see what happens there in, of course, the SPY, and to see if UBS or Barclays get it right. Let's go to some other headlines out in the market. Of course, let me know if something caught your attention. I know that outlook definitely caught me by surprise. But let's go towards Opendoor, as that is getting a ratings change here. Goldman Sachs downgrading Opendoor Technologies to sell and lowering price target to $2. This is definitely not what you wanted to see. Of course, this stock came through SPAC and was a big player in the pandemic, was getting big spikes. I remember this. This was in 2020 in August, and it made a huge run going into 2021. And then since that February time in 2021, we've been on a straight downturn in Open, and it did spike right before kind of the beginning of this year and then right back down. So you got to be careful in these names. Zillow also losing a lot, down towards 28.42, could eventually break 20 and break the pandemic low. Not what you want to be seeing in housing. And I definitely want to be careful with these names because I don't think they're coming back anytime soon, especially with the high interest rates that we have right now. It's going to be trouble for Open. Will they be able to hang on? That's a concern right now. I think you could potentially see Open leave the door. We'll see what happens. It's going to be trouble right now. $2 outlook. Will they have enough cash to make it through this environment? It's trouble outlook. Earnings stocks this week is definitely important. We're going to talk a little bit about some of these earnings stocks. We can take a look at the earnings calendar. If there's a stock that's on your radar that's up on this calendar, throw it up in the chat, and I'll make sure that we touch it. All right, of course, there's some big earnings tonight. You're going to get, Lockheed Martin. You'll get some banks to come through. But tomorrow, before the open, we start really getting things moving. We'll be getting Albertsons, Johnson & Johnson to get moving, Hasbro. And then, of course, after the close, we really start our earnings call outlook here on Benzinga. We're going to be having these earnings calls, so you don't want to miss it, team. Want to see you guys at these earnings call and then have a chat with me. Let me know what you guys see in the action, of course, on these earnings call. We got Netflix after the close on Tuesday. United Airlines. There's a lot going on, especially we really kick it off after the close on Tuesday. Then before the open on Wednesday, you got PG, Travelers, a lot going on there. Ally, a lot, Advance Health. We got a lot. Abbott Labs that will be reporting. And then Wednesday, Tesla. Bouncing back today, getting a little bit of a bounce back. Will this continue to hold? Of course, it's right off the support. Going to be an important earnings report for Tesla. Will the generals get hit? We've already seen Tesla come down, Apple come down. Now it's just going to be about their earnings. Will their earnings come in? Will they beat and get some lift, or will they get hit hard on Apple and Tesla? All right, getting out of the earnings stock this week. We can keep talking if you guys have any of these that are catching on here. Looks like we do got some in the chat, so I'll go through some of these. Let's take a look at Lockheed Martin. It's been trying to hang on to the 391. Actually have a support. Maybe we can draw it down to 390s here. And it's been holding on. It's been kind of sideways here. Now, will it actually bounce back towards the 410? Or will he start cutting through and getting towards the 370s? Of course, in this environment, I could see maybe a little bit of a bounce back. So I think you got to wait and see. Of course, if it does crack below, let's say through the 380s, well, then I'd have to go. But if it makes a move back into the 400s, it's going to be a truly interesting kind of trend. You want to make your way back towards the top of the trend line. Of course, right now you're on the support, so you're looking for a little bit of a spike up towards maybe 410s, 413s, and then making your way back through this weekly high of 418. Going to be vital if you're going to make your way back towards the 420s and the 422 running into the trend line. EXPI. All right, let's take a look there. EXPI. This one's trying to make a comeback. EXPI trying to bounce off of that near $10 level. There's not much going on in this one, though. It's just kind of sideways, kind of slow, methodical movement. But until it really gets back through, I would look through like kind of weekly highs, then you're just not paying attention to it. So right now, to me, at least on the bull side, 1303, 1302, you need to get back through 13 if you're going to start seeing a trend change in this one. And it's just been downtrending for about almost a year now. So you got to be careful there in that EXPI, especially real estate services. I'd be concerned. All right, we'll see what else is going on in the markets. Of course, there's going to be a lot of earnings report that shake up things. One that's going to be really interesting to kind of watch will be the Snapchat. As Snap, of course, when they report, you get Meta to move off of it. You get a couple of stocks to move off of it. Pinterest even moving off of it. So we'll see. Will Snapchat be able to hold on? I mean, this one was a battle. It eventually went down there towards around $5 and then bounced back all the way above 70. Now it's towards $10 again. What a wild ride it's been for Snap, and what a roller coaster from that $5 kind of 2019 time towards where we are now, back towards 10 after hitting above 70. And this one just been out of favor. And I think until they change something with their business model or get some more money in their ad revenue, I don't see things pointing towards the upside, but they got to innovate. And that's the important part. We'll see what happens there in Snap. Last one, let's take a look at the overall market before we get into our next interview. How are we doing right now? Looks like we're trying to hold that 367 every time we've gotten up here. We've gotten a couple of wicks, maybe this hard body that kind of got up there towards 367.84, but not been able to hold on the day. Will we take that next leg? Let's keep a watch towards the end of the show. Apple having a good day. Microsoft leadership. Overall, it's a really good day for the market right now. A lot of stocks are up and holding their gains. Now, can they continue? It will be the question. All right, let's get out of the earnings stocks this week. Let's get into our second interview today. Like always, we're going to keep trying to get through all the earnings stocks. So stay tuned. We'll be talking about all these stocks this week. Let's get out of that. Now let's go toward interview today. Let's pull off this and get right into our interview. All right, let's go ahead. Let's get Matt Venturi, founder of Clearingbid, on today. How we doing, Matt?
Good, Mitch. How are you this morning?
Doing great. Welcome to the show. Let's first talk a little bit about Clearingbid. Tell me a little bit about yourself and how you founded Clearingbid and what does it do?
Well, great. Thanks very much. And thanks for the opportunity to be with you here today. My background is I'm a Wall Street veteran, spent a lot of time all on the sell side, starting with Merrill Lynch in a rotational program, became a broker for a couple of years while going to NYU Business School at night, moved down to the syndicate desk on the debt side with Merrill, left, joined Smith Barney in their investment banking area, and spent 12 years doing industrial calling and financial structuring and new issue underwriting, among other things. Went off on my own to establish a boutique investment bank for a few years, and then ended up at Houlihan Lokey, Howard & Zukin, where I helped build up their investment banking efforts. But this collective experience over the years really initiated an effort to want to go out and do something different that would really take advantage of the sales network out there that brokers offer, but be able to essentially, in many respects, democratize this whole IPO process to make it available to all. So we built Clearingbid as a way to effectively have a network that opens investing to all and leverages the same order entry protocols as a secondary market, but allows advisors and brokers on behalf of their clients they're doing the KYC and suitability testing to be able to seamlessly put orders in for new issues and have an equal footing to the big institutions that historically have had the advantage here.
Perfect. So how does it differ than just, let's say, buying an IPO that went public?
Well, typically when an IPO gets priced, in many cases, you see them trade up in the opening trade once they're free to trade and break syndicate in the secondary market. In this case, the investors are able to put their orders in through the brokers. The brokers authenticate these orders. These are good till canceled orders until the pricing takes place. And then once the pricing takes place, if the bid that the investor puts in through his or her broker is in the money, it's at or higher than the price at which the offer gets priced, they are going to be entitled to a fill. It may not be 100% fill, It'll be dependent upon the timestamp, the priority during which those orders come in. But the earlier orders get a higher allocation, the later orders get a lower allocation. But they're able to get the print or the offer price, the price at the offering of the IPO. So not in the secondary market, not when it trades up, but on the initial IPO pricing.
Yeah, I mean, this is definitely going to try to improve on the inefficiencies that we've been seeing in the process, right? For whether it be the pricing allocations of IPOs. And I mean, we went through a big SPAC boom there. That was another situation. Let us know, how is this really going to improve the process for the investor?
Well, right now, probably 95% of the market is excluded from this. Typically, the large underwriters are favoring the larger institutions who designate the underwriter to get the selling concession, essentially in exchange for allocating them the securities. And the amount of securities that typically get allocated are less than what a number of these institutions would like to have at the end of the day. And consequently, they're underallocated, tends to be underpriced, and there's a lack of broad distribution. So in our case, Mitch, what we're really saying is, hey, look, every account, just like the secondary market, has equal footing. There really shouldn't be any discrimination between a retail or institutional or large cap, small cap account. Every account and every investor on the secondary market has an equal footing. What it really comes down to, when the price is the same, the size of the offer is the same, the bid's the same, comes down to the timestamp. So again, we follow the principles in our algorithms in terms of who gets allocated how many shares. Again, everything in the money gets allocated some fill, but it's predicated upon the timestamp. And so in our case, we're just saying, hey, look, follow the same secondary market order entry principles, follow the same settlement and delivery principles, and do exactly what the secondary market does millions and millions of times a second, virtually, for IPOs, and open it up to the broader universe who really want to buy, own, and hold these securities from the first day out.
So how will this change in the future? Are you looking for this to get kind of picked up more often? And then, of course, you guys do it right now, but do you think that this will be kind of actually a feature that gets implemented with brokers and partnerships expanded?
Yeah, I think, I call the broker community my peeps, because I spent time in the sales side, which was unusual because most people in investment banking who've gone through the syndicate and investment banking route never had the chance to do that. And I think being in the trenches and understanding, what it takes to build assets under management, client retention, and that whole sell side. And the business has migrated more into an asset management fee versus, commissions. But at the end of the day, you're out there, you're working with your clients to really do what's in their best interest to try to create the diversity and opportunities for growth and wealth building. And so our intent is to really leverage that distributed sales force, I like to call them, over 600,000 brokers and RIAs that are completely excluded from this process, and be giving them the opportunity to be able to utilize this platform just like they enter orders through their order management system, whether it's through a Schwab or Fidelity or Stifel or Wedbush, it doesn't matter. Brokers know how to submit orders. Those orders get cleared through their firm, clearing firm or affiliated firm. And we're just saying, hey, look, let's do the same in the primary market and give these people, give this constituency a new issue solution that they don't have today.
Well, I'm sure I speak for many that we definitely want an even playing field. So I appreciate you battling for us, Matt. Now, the last question I have for you is on the IPO market overall. Of course, we've had a struggled time in 2022. How do you think that we'll start moving into 23?
Yeah, it's a good question, Mitch. I, don't have the crystal ball, but at the end of the day, the question comes up, well, this is kind of bad timing because the IPO calendar is light. And that's true. But in reality, there's going to be a continuing need for growth capital. There's going to be a continuing demand for price efficiency here. And our ability to cast this wide net to allow this greater participation is going to effectively allow issuers to be able to put securities in the hands of the investors that want to own them, but also in a very competitive basis. So over time, say going into 23, I believe that there will be a continuing need for capital formation, and that whether it's equity IPOs or it's debt, whether it's taxable or tax exempt, all these issuers are looking for better execution practices And the ability to do that with a broader participation with this price discovery and the ubiquity in terms of connectivity is the way to do it. And the tools that we provide, including access to all marketing materials and this real-time pricing update and the ability to know kind of where you're coming out in the end, incentivizes people to participate. It's kind of the handshake with the public. Hey, look, we're giving you the fair shake and opportunity. Come on and play, and you're going to like what you see.
Yeah, I appreciate you giving it to the retail investor and providing education, everything that they have for you that you would be looking at it if you were an accredited investor, and getting the opportunity. That's what we all want. We just want an opportunity to go ahead and play on an equal playing field. So I appreciate you coming on today and talking about Clearingbid. I'll go ahead and make sure that I throw up here a link. If you guys want to go ahead and check out Clearingbid, I just threw up the link to the website, and we'll definitely have you back on, Matt. Appreciate you coming on.
Thanks. Great to see you, Mitch. Thanks so much. Good luck with everything. Doing a great job. Appreciate it.
Have a good one, Matt. All right, there you guys have our second interview. And definitely, I think it's an important aspect to have, right? I mean, there's so many companies that a lot of the time are awesome companies that are private and are going towards the IPO process, but we don't get access until when? Well, by the time it's already hit the newsstands and its stock is ripping up a couple 100 points away from where other investors got the opportunity, that's what we want. We just want that opportunity to get in there and make our own decision before we're getting, of course, to these open markets and finding some new price discovery. We'll see what happens there. Of course, Clearingbid, and you guys can check it out for yourself. Throw up the link, and let's go back to the markets and see what we see right now. There's the 367.50s. Now it looks like we're starting to try to hold towards it. Will we get the little break? You guys see here on the 15-minute chart, couple of times we've pushed up here and rejected. So let's see what happens now. Do we get towards the 368 and start pushing back? Of course, the number I think that's an important one to watch, if we can get through this 368, would be going towards the 380s. Of course, that way we can start building some sideways action on the SPY, which wouldn't be bad, really. I mean, I think we all could use some sideways action versus this swing up, swing down, swing up, swing down. But we'll have to keep watch to see what happens in the market. Looks like you guys are talking about steel, some steel stocks in the chat. I'll definitely cover those before we get out of here. Let's take a look here. All right, so you guys are talking about X and Cleveland Cliff. I see you guys talking about it in the chat. So let me take a look there, how it's been trading. It's been kind of going sideways here for a while now. And I think if you pull up the hourly, you're going to see that kind of sideways action. But it's been holding 19s on pullbacks, 1875. Now, can we get a real push through 20? I think that's the important level to kind of watch here, because if you could get that push through 20, you're going to have that outlook to get through the 2050 and then really start driving. That would be a drive towards the next price point around 21 is where I could see it going to. It's going to be all dependent on how a lot of these steel stocks come. I mean, look at Nucor and look at the bounce that it's had recently. It did bounce back. Can these actually continue some lift? It's going to be hard to watch. Coal stocks have been doing great. I will say that. BTU continuing on the run right now. Can it get a next level rip on the daily going towards the 52-week high that we got back in April? And off the 15th, the 14th, really close to that on the 18th of Monday on April. Will we get back there to the 30s? That's what I'd keep watch on BTU. All right. Oh man, Fubo, man, there's still you guys out there still trying to pump that Fubo. I see a lot of people trying to pump that Fubo recently, and it looks like, yeah, you're getting some attention, but where's the rip? Where's the rip? I've been waiting for it. No news on Fubo. All right, keep going. DraftKings. Be someone talking about that. Let's take a look there, how DraftKings is doing right now. Looks like it's sideways back towards the 13s, and that's not a good sign there for DraftKings. I think you're going to have some concerns in the long run because of recessions. I think you might even get back there towards the 11. I don't know about DraftKings here. It's in the middle of nowhere land for me, and it does have some support underneath it, but it could easily go back towards 11. We'll see what happens there. All right, that's going to do it for me. Like always, team, you guys can stay up with me at the close. We're going to continue going into the market action. That's at 3:30. Don't miss that, team. Do want to see you guys over there with Joel Elconin as we take a look at all the market action and what stocks caught the tape. We'll see what happened there. There's no bull flag on DraftKings. Yeah, I don't see no bull flag on DraftKings there. Yeah, I wouldn't see that. I mean, I see what they're trying to show you right there. They're trying to show you this kind of move here. I'll show you it. This is what they're saying, Jay, is a flag pattern, but I wouldn't necessarily draw that as the flag. You can see it there, kind of a declining wedge, kind of going sideways on the intraday action, but really needs to kind of make that lift. And I just don't know that they're going to have the catalyst to really continue this move. And, of course, the NFL football season did give it some lift, but has it continued that lift? Nope, I don't think so. And take a look at Penn. Penn is one that you want to keep on watch. If you can see Penn actually rip, then maybe we can actually make that next leg up. But for right now, Penn has just kind of been going a little up, sideways, and still not getting out of the funk that it's been. And if you look at the monthlies, the monthly will show you how that sideways action hasn't really had a big push. All right, that's going to do it for me. Like always, I'll see you guys on at the close. Hit the thumbs up. We had a great show today. We talked a lot on what was going on in the UK, China news that you got to keep on watch. Bank of America, Splunk went into the agreements today, the acquisitions. We also talked about Roblox, MasterCard getting into the crypto trading platform, sharing it, trying to launch a program with banks, trying to help them with regulatory compliance and security. And of course, UBS with the big, bold call out there of 2982 by year's end on the S&P 500. We'll have to wait and see to see if UBS, Barclays, and JP Morgan's Jamie Dimon, which one will be right? They're stating about 20% down still to go. We'll have to wait and see and find out. See you next time, team, and definitely stay up with us. We'll be back at 3:30 with none other than At the Close with Joel Elconin. I'll see you guys there.